Good morning, everyone. It's a pleasure to bring you this month's edition of Global Perspectives. As we approach the year end and look at 2010, I see two key investment themes. First, that the global economic recovery is sustainable. Second, that market valuations are not stretched. Going into the new year, I expect the private sector, which has seen rising profits, to begin hiring workers, which will help sustain consumption and make the recovery sustainable. Second, I feel that market valuations are not overly stretched and that there are compelling investment opportunities out there. I've argued in the past that we are reaching the peak of our labor market adjustment following the economic crisis of last year. The unemployment rate peaked at 10.2% and has come down recently. However, unemployment is a lagging indicator. It's important to look at employment and its relationship with corporate profits to get a sense of what to expect next year. If you look at chart number 1, you'll see that employment and profits are highly correlated. The dotted line in the chart shows corporate profits going back to 1970, and it shows how they've risen recently. The black line shows the trend in employment. You can see that corporate profits have risen while employment has stayed negative. We expect that firms will begin hiring next year, given that their profitability has increased and that the expansion will continue. The second key investment theme for 2010 has to do with market valuation. There's quite a bit of skepticism out there in the market, given the strong run-up we've had since March of this year. However, if you look at chart 2, you'll see historical trends for yield spreads for various asset classes. You can see in the graph that yield spreads have come down significantly from their peak during the height of the crisis. However, if you look at the table inserted in the graph, you'll see that yield spreads are either slightly above or only slightly below recent historical averages. Yields on high-yield corporate debt are 9.8%. Yield on emerging market debt are close to 7%. And yield on high-grade corporate debt are about 5.5%. Earnings yields for equities are also slightly above historical averages. Hence, I don't see valuations in the market as overly stretched. They're well above historical lows. In terms of our investment strategy for 2010, we've avoided the sectors with the weakest balance sheets, such as U.S. Treasuries and household, and have emphasized those sectors with the strongest balance sheets and growth: corporate bonds and emerging market debt. Again, the key theme for 2010 is that the economic recovery will continue, that there are compelling investment opportunities out there, and that it is important to stay invested. Thank you for your attention.